Hey folks, welcome back to PolarByte, your no-nonsense crypto pulse with that straight-up Canadian grit, where we chase the global chaos but always snap it back to how it plays out for us up north. From ETF whispers to CRA curveballs that could flip your bag overnight. If you're not subscribed yet, smash that button now. It's your edge against missing the moves that stack real wins, and we're growing a crew that's sharper than the average maple. Quick hook to pull you in. Bitcoin's teetering on a cliff that could wipe 10% in a flash. Gold smashing records like it's got a grudge. Stablecoins are exploding to all-time highs, pulling in trillions. But here's the kicker. Corporate Bitcoin plays are crashing hard, and it might just be the warning shot for your portfolio. If this grabs you, drop a like to fuel the fire and keep the algorithm on our side. But heads up, this is my breakdown on the charts and headlines. Not financial advice, so DYOR like your future hodl depends on it. Loop in a pro for your taxes and only risk what won't kill your vibe. Eh? Let's unravel this suspense, starting with the market that's got everyone on edge. Quick market snapshot to crank the tension. The global crypto cap's clocking in at 3.75 trillion today, up 2.8% in the last 24 hours alone, with trading volume roaring at 221 billion. Bitcoin's dominating at 57.3% with a price of $107,771 and a 3.1% nudge. Ethereum's right there at 12.4% dominance and $3,845 up 2.7%. BNB's steady at $1,146 with 0.8%. XRP's popping at $2.30 and 3.9%, and Solana's surging to $183 with a 5.2% lift. The gainers are stealing the show too. Chain Opera AI ripping 25.5% to $21, Story climbing 10.7% to 5.45, and Zcash up 9.7% to $214. It's that mix of blue chip ballast and altcoin fireworks that's keeping the volume high, but whisper it. The dump's lurking if liquidity tightens, and for us Canucks, it's a chance to scoop stable gains in our ETFs while the South sweats. Now, the Bitcoin dump that's got traders sweating bullets. BTC's hovering at $108,800 after a sharp 2% slide at Wall Street's open, with the bounce from Friday's leverage flush fizzling fast, leaving bulls pinned below that brutal resistance at $114,000. It's Groundhog Day in crypto. Prices pulling back hard while gold and silver notch new records. Gold's blasting past $4,300 an ounce, up 2%, silver ripping 3.6%, leaving BTC in the dust, and that BTC gold correlation spiking above 0.85 per QCP capital as flows chase traditional safe havens amid the squeeze. What's the culprit? Tightening liquidity's the silent killer here. The spread between SOFR and EFFR jumped to 0.19 from 0.02 in a week, the highest since December 2024, signaling lenders demanding premium rates even for treasury-backed loans. And banks tapped $6.75 billion from the Fed's SRF Wednesday, the biggest since the pandemic. This funding stress is capping risk appetite, flushing $20 billion in positions last week and sparking hopes for central bank relief. But if it drags, that 102K low from BINANCE could return, a 19% gut punch that'd test the bull's spine. Traders like Roman are calling a failed reversal on the 4-hour chart, warning of wick fills down to 102K, invalidating his setup, while Crypto Tony eyes 110,500 as the line in the sand, and Ted Pillows says hold above 102K monthly or it's concern city. Suspense is thick, folks, with whales watching like hawks, but if liquidity eases, we're coiling for a vicious snapback to 114K or higher. Adding fuel to the fire, the PIPE model is crumbling under Bitcoin treasury strategies, turning corporate hodl dreams into shareholder nightmares. PIPE, private investment in public equity, is the fast cash hack where big investors snap up shares at a discount to fund quick BTC buys, but it's backfiring bad. Firms like KindlyMD, NAKA, and Strive, ASST, raised hundreds of millions, stacked BTC like bosses, yet their stocks tanked 90 to 95% from highs, with market net asset values dipping below 1, meaning the market prices them lower than their Bitcoin haul. Take NAKA. reverse merger in May with Nakamoto, PIPE pulling $563 million at 1.12 per share plus a $200 million convertible note, totaling $763 million to grab 5,764 BTC for $681 million. David Bailey as CEO, but shares crashed from 30 to 0.80. Strive is no better. SPAC deal with asset entities, $750 million PIPE at 1.35 per share for 5,885 BTC debt-free, plus buybacks and a pending Sumler acquisition to hit 11,700 BTC, but stocks from 12 to 1. The pattern? Post-merger hype fades fast, dilution from notes and shelves burns retail, and even pending deals like Jack Maller's 21 Capital, 43,514 BTC, shares from 10 to 60, then 20, or Adam Back's Bitcoin Standard, 3.5 billion PIPE target, are flashing yellow. PIPE's speedy cash for BTC hoarding, but it's incinerating value, screaming caution for any treasury play eyeing it. But hold on, amid the dump, stablecoins are the unsung heroes, surging to a record $334 billion market cap, with Tether's USDT and Circle's USDC leading the charge as the Genius Act levels the field, treating compliant ones like cash and fueling confidence. Tether's grabbing 70% share, plotting a US-regulated USAT by year-end with 15 to 20 billion raise, while USDC's circulation is exploding faster than expected, chipping at the lead. The race is heating up. Citigroup's eyeing its own stablecoin, Visa's piloting one in April 2026, and Canaccord's calling it the internet's money layer, underpenetrated versus USM2, but primed for 2026 expansion into payments and DeFi rails. This isn't just trading fodder, it's the backbone for global flows, accelerating wallets, custody, and dApps in a reinforcing loop that's the real bull fuel while BTC wobbles. For us Canucks, it's a green light. Compliant stables like USDC fit seamless in TFSAs, earning 5% yields tax-free, dodging the foreign reporting headaches of offshore plays. On the Canadian front, let's tie this suspense to your stack. While BTC dumps on liquidity crunch, our ETFs like Purpose are soaking up 100 million inflows this week, stable despite the noise. And with Bank of Canada eyeing an October cut mirroring the Fed, it's prime for risk on without the US shutdown drag. CRA's watching. Log those stable yields as income at FMV to avoid reassessments, and if pipe crashes shake your treasury bets, harvest losses now to offset 50% of capital gains. Carry them forward forever, no wash rules here. For beginners eyeing stables or dips, link up WealthShimple. Grab BTC or ETH in your TFSA with 0.40% fees and 50 to 150 buck bonuses on your first 500 deposit. It's regulated, CAD first, and your buffer against vol. On that note, find the Binance link in the description for global dips with a VPN if you're bold, or stick local with WealthShimple for stable sales. There you have it, PolarByte Squad. The dumps got BTC on a knife edge, pipes burning treasuries, but stablecoin surge is the steady hand pulling us forward. Suspense is high, but play smart, and let's turn this tension into your triumph. If this kept you on the edge, smash subscribe for more Canada Sharp breakdowns like our next RWA rebound. Drop a like if you're holding through the wick, comment your take on the pipe flop or stable play below, and yeah, where you from? Stay vigilant, stay bite-fueled. Catch you next.